Let's talk to Nick Lyth. He's the CEO of Altona Energy. Nick, Happy New Year. Welcome.
Happy New Year to you.
To Core London. Done some background. You are the CEO. You're an AIM-listed company. Share price currently 0.4 pence and the market cap circa £6 million. What do Altona do to kick off with?
Altona is a coal mining exploration company. The assets are based in Australia. We've been listed on AIM for about 10 years, something like that. And we're seeking to extract value from what is actually an incredibly large coal resource in South Australia in the Akaringa Basin. I've been appointed the chief executive about 3 months ago. I'm rolling out a new strategy for the business, and it's all about trying to extract value from the coal resource and pass that value on to shareholders.
Okay, so in terms of the new strategy, that terrifies some people because it's new.
Sure.
Can you clarify what the new strategy is?
Yeah, of course. If we go back a step, the strategy has always been based on this enormous resource that exists in the Akaringa Basin. In total, it's about 10 billion tonnes of coal, which is enormous, of which our tenements cover about 7.8 billion. And historically, the business has been focusing on coal to liquid type technology. Then it moved to underground coal gasification. And when I came in to be the chief exec, I had a look at this and thought, this isn't the way forward for the business. The way forward for the business is to try to find some economically extractable coal from this huge resource and build a coal mine out of that. And that's what we're working on at the moment. We think we've found some economically extractable coal sufficiently large enough so that we can create a coal mine of our own in the Akaringa Basin.
Okay, so 2018, what's that all about?
2018 is all going to be about continuing the exploration process. We've already done some geological work and reanalyzed the seismic work, and we believe that there's a sufficiently large coal seam sitting in what's called the Westfield tenement. To give you an idea, there are 3 tenements. There's Mullacoppy, Wintinner and Westfield. And as they gradually go further and further west, they gradually get drier and drier. The problem has always been people have analysed Mullacoppy and Wintinner. It's got huge quantities of coal inside it. But unfortunately, it all sits underneath the Great Artesian Basin, the water that sits on top, which presents massive technical issues to get it out of the ground, but huge environmental issues too. We think we've found a bit of the Westfield tenement that doesn't suffer from those problems. And we're going to explore that area properly in 2018. And providing we get the results we think we're going to get, we then move on in 2019 to a bankable feasibility study. Once we've done that, it's bye-bye Altona. We're going to sell the business at that point. In fact, Altona's for sale today.
Right.
The Altona will be sold today, tomorrow, and all the way through to the completion of the bankable feasibility study. And of course, as we gradually de-risk the project, gradually prove up the resource, the price is going to go up and up from where it is today. But the business is for sale from today all the way through.
Tell me about China.
We have a joint venture partner.
You do?
Who's called Sinowas.
Yep.
It's really a consortium of very, very high net worth individuals who are interested in overseas resource opportunities, specifically in the energy sector. They came on board to work on a UCG strategy. That didn't quite work out as they were hoping it was going to. I've been to see them subsequently. They're on board for a conventional coal strategy. They've signed an MOU to say, yes, they've still got the 33 million Australian dollars, that's about 18, 19 million pounds available to prosecute the strategy that we want to adopt in terms of the exploration and the bankable feasibility study. So they're on board. They're ready to go. We've signed the MOU. We're putting all the other pieces in place. We're doing our exploration, and we're going forward, proving up the resource and de-risking the opportunity together.
Now, obviously, there's assets here. It's always, for me, sort of being formerly in hedge funds and the likes, cost of production. Tell me about the cost of production.
Well, at the moment, until we've completed our exploration, we can't actually nail down our complete cost of production. What we can accurately say is that there are a number of other large-scale thermal coal miners in Australia, and they publicly announce their FOB costs. Their FOB costs are typically in the range of about 50 to 60 Australian dollars per tonne, something like that. We don't know what ours is going to be yet, but certainly the publicly announced number is about 50 to 60. To give you an idea that the global so the macroeconomic conditions associated in Australasia, associated with coal production and coal sales, are very, very favourable. And at the moment, the FOB selling price of thermal coal from Australia is $128 per tonne. So their selling price is 128 and their cost is somewhere between 50 and 60.
So.
We don't know what our cost is going to be, but as you can see, it's an extremely lucrative and profitable business.
Yep.
As things stand. The share prices of all the coal people in Australia are going through the roof and they're making record profits. You've got a company like Whitehaven Coal. 2 years ago, 59 cents a share, currently 4.54. So they've gone up eightfold in 2 years on the back of the macroeconomic conditions associated with coal production and sale.
Understood.
That's what we're looking to emulate.
Okay, so again, back to my broker hedge fund hat. Okay, give me 3 reasons why I should consider having your shares in my portfolio.
We're cheap. Fundamentally, we're valued about £6 million today. As you can see, if we can prosecute this strategy, get this thing through the bankable feasibility study, the valuation will not be I don't know what it'll be, but it will not be £6 million. That's for sure, once we can get it through that process. We've got a fantastic world-class resource of coal. And we think that we can identify the right bit of that coal so that we can prosecute our strategy. And finally, I've got a joint venture partner with very, very deep pockets. We're not going to run out of money on this one. They've got more than enough money to prosecute the whole strategy that we need to adopt. Those are the 3 reasons.
On that note, Nick, fascinating stuff. Thank you very much indeed for your time.
Thank you.